The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 8:30 a.m. Tuesday morning. 60 minutes to go until the opening bell. We have futures markets in the positive right now by about 1.5% to almost 2%. Dow futures up 377 at 23,686. That's 1.6% in the positive for the Dow. S&P up 41 points or 1.5%, trading 2801. NASDAQ futures up 151 points, 1.8%, trading at 8478. Oil trading lower, off 75 cents at 21.66. The 10-year yield right now, 0.738%. Start things off. Let's jump over to the indices. We'll start it off with the S&P. You see the volatility. We'll zoom it in. We're on a 15-minute chart. There's your action Sunday night. Here's your action yesterday, dipping to a low in the S&Ps of 27.11. We're up a solid 90 points from that level. You see the acceleration into the end of the close yesterday, finishing at about 27.60. The run higher beginning at about 10:30 p.m. Eastern time in the S&Ps as we go from a price point of 27.53. We reach a high at about 115 of 28.08. About 8 points from that level in the S&Ps. NASDAQ up 159 points, 1.8%. Let me take this bar off of what we have here, remove drawing. Zooming in on the action so far this week, there's your Sunday night action. The NASDAQ, the strongest index yesterday of all of them. The NASDAQ actually almost peaking above where you were Sunday by the end of the trading day yesterday. We trade from about 83.20. We're now up 150 points from that price level. We reached a high of 84.88 overnight. The Dow trading 23,671. As you can see, a little bit of a different story as the Dow not quite over the peaks that we had on Sunday evening of 23,911, approaching the highs we had just after 1 a.m. Eastern time of about 23,739. So you're only talking about 60 Dow points or so. The S&Ps, just for reference, where we were Sunday, that high, 2819. Again, S&Ps and Dow not reaching that spike high yet. The NASDAQ, though, decently over that spike high. In terms of commodities, check out that crude oil chart. Talk about an acceleration to lower prices, folks. 28.36 afternoon of Thursday, the final trading day of last week, and just remarkable acceleration to lower prices. Even Sunday night, we spike lower. Traders get a reprieve until about 9 p.m. Eastern time. And then, my goodness, from $24.50, we're down about $3 to $21.66 from Sunday evening. Gold contract pulling it up. Gold trading higher, $17.85. The high last night in gold at about 10 p.m. Eastern time. Right now, you're looking at a gold contract trading at $17.69. For some context here in gold as well, I mean, we are climbing quite a formation, cup and handle formation. You could call it pretty simple. There's your handle. Here's your cup. We're climbing towards those highs of 2011. Yes, August and September of 2011, 1923. But we're right at this critical level that we kind of hung at between October of 2011 all the way through October of 2012. You did dip back down to about 1526, but hanging near those highs before this cup formation starts. 1769, the price of gold. And zooming into notes and bonds, how we're trading, a little bit of higher price, lower yield. This is the long-term chart. Jumping back to this morning, 15 minutes, 138.07. You see that yesterday's action, right where we were, we actually traded down to about 137.28 overnight before rebounding back. In terms of other news we have going on out there, JP Morgan out with their earnings. The biggest bank on Wall Street, big decline in first quarter earnings from coronavirus, but post record market revenue. They posted the first quarter profit well below analyst expectations, although the revenue held up amid the coronavirus pandemic. The bank posted quarterly per share earnings 78 cents a share, missing the $1.84 estimate. The company added $6.8 billion to loan loss provisions. The reserve increase signals that management expects a surge in defaults across the company's lending business, including credit cards, energy, real estate, and retail sector. The one bright spot, JP Morgan's trading division, a 32% increase in revenue to a record $7.2 billion. Profit of $2.87 billion plunged 69% from a year earlier, driven mostly by the provisions, while revenue proved to be more resilient, slipping 3% from a year earlier to $29.07 billion. Let's see where JP Morgan is trading on that news this morning. It's a big week of earnings, folks, too. So we closed at 98.19. The S&Ps right now are up about 1.5%, and JP Morgan out with those earnings up a bit as well. Got to love the Thinkorswim platform. We get the numbers at about 6:30 this morning. So there's the actual 78 cents, the estimate 219, and then the conference call beginning right when we got on the air. Always interesting as to how that can swing things. For the conference call right now going on, JP Morgan at about 101. In the time of record low rates, right, being a bank, that trading number, quite a number with some market volatility. The bonds doing a lot in there, I'm sure. Jumping around to some of the other banks while we're on it, Bank of America, $24.56, up from $20 just a week ago. Let's put these back on a daily. Quite a collapse from 35 down to 17, back up to 23. Citi from 83 down to 32, back up to about 46. Other stocks in the headlines today, we'll jump over to Tesla. Tesla going to open up about $50. Talk about a rise from 550. Let me back off. 550 just on practically Thursday, the final trading day last week. You're going to add 150. That's almost 30% that you're going to run from where we closed at Wednesday to where we're going to open at right now at 700, and jumping over to Tesla shares pop after Credit Suisse upgrade stock says company will increase electric car lead. I'm going to jump over to this story that is coming as well. Close that out. That's a pro, of course. I had it up ready, but nonetheless, Tesla, you can see they get an upgrade. Company will increase electric car lead. Not a surprising thing if you've been following Tesla. Tesla, you want to talk about some volatility. How about that volatility of an exponential run, parabolic run from 362. I mean, if you said it 968, if you said it when you were here, if you said it when you were here. So this date, February 4th, they almost climbed back up to the high on February 19th. That high being 944, 968 the prior high, and just like that, as everything collapsed, 350. You lost $600 of a $968 stock. We're going to be back up at 700. Just be careful here if you're a Tesla buyer, because there is a lot priced into this equity, and it might be valid, but man, there is a lot priced into that equity. Some of the other stocks, how about Amazon yesterday? Quite a charge higher on Amazon. Not really surprising. Now this morning too, we're going to open at all-time highs. Right now you get the bid ask 2205 by 2206. That's going to be an all-time high on Amazon. Yesterday, I mean this is a daily bar. That's a 130-point bar on that stock. So we're going to open almost 40 points higher right now this morning. Not surprising. Remarkable. 1626 to over 2000. You're talking about March 16th. To April 16th, adding $400, almost 25% in a company like Amazon in the span of a month. Remarkable moves. Stay tuned, folks. We'll be coming back from the break, see what else we have on tap. Big week of earnings this week. Starting it off with JP Morgan. They seem to have delivered, trading higher this morning so far. S&P's positive by 39, Dow positive by 329. Stay tuned, folks. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Markets hanging on to positive territory. You're sitting at the S&Ps just shy of 2,800, 2798. That's positive 38 points. The Dow positive 327. Jumping over some other news stories of the day. You got Wells Fargo up there reporting as well. Didn't even jump to them. First quarter earnings per share just 1 cent as it sets aside more money for credit losses. Wells Fargo, first quarter earnings well below expectations. The company set aside that money for credit losses amid this pandemic. The banking giant reported a profit of just 1 cent a share. Analysts were looking for 33 cents a share. Revenue of $17.717 billion. Analysts looking for more than $19 billion, 19.284. Wells reported earnings of $1.20 a share in the year earlier period. Net income for the company dropped 89% to $653 million for the quarter. You know what? With that said, folks, with the amount of bad press, bad actions, with the combination of low rates and an economic slowdown, net income for the company, $653 million in 90 days, and that's a drop of 89%. Still pretty staggering numbers, but I imagine they were looking for more. Wells noted, however, its results suffered from a reverse build and an impairment of securities that resulted in a loss of 73 cents a share. Our results were impacted by a $3.1 billion reserve build, which reflected the expected impact these unprecedented times could have on our customers. Net interest income at the bank fell to $11.31 billion in the quarter from about $12.3 billion a year earlier. However, that was above the analyst estimate of $10.91. Credit card fees falling 6%. Amazing, right? $892 million in credit card fees. So remarkable numbers, and you see that they mention it's trading up on those news. Wells Fargo, yeah, it's paired some a bit. You almost made it up to $33 initially. Overnight, the news comes out, you go from $32.40, it looks like, down to a low of $31.10, sitting at about $31.85. I imagine they'll have their conference call at some point today. Other stories out there in terms of stocks, dividends, earnings. J&J raising the dividend, but cuts 2020 earnings outlook over the outbreak. Shares rise. Johnson & Johnson raised its dividend from 95 cents a share to $1.01. That's a 6.3% increase, and it beat Wall Street's earnings and revenue expectations. So they go from 95 cents to $1.01. On an adjusted basis, J&J reported $2.30 per share during the first 3 months of the year, higher than the $2 a share expected by analysts. It generated $20.7 billion in revenue, higher than the $19.47. That is quite a beat when you're talking about 90 days, and you took in $1.23 billion more dollars than analysts were looking for. And of course, they brought some of that to the bottom line. The dividend this morning is a real good sign of strength for the company. You can't argue with that, right? Increasing your dividend at this time with the economic slowdown, 16 million jobless claims over the last 3 months. The company lowered its 2020 adjusted earnings forecast to between $7.50 and $7.90 per share. Previously, that had been at $8.95 to $9.10. Sales in J&J's medical device unit fell by 8.2% to $5.9 billion during the quarter as the COVID-19 outbreak forced hospitals to postpone elective surgeries and Americans stayed homebound. So interesting stuff, right? You're in the medical device field, but those devices being used in procedures that are more elective can be delayed. So those shares actually, those sales, I should say, actually suffering. J&J, gotta love when a dividend gets raised, though. Check out that action. From 140, you initially spike up to 146.50. The conference call beginning right at 8:30 as we jump on the line. Lots of action in earnings coming up. And speaking of what else we have in action, Basil Chapman, folks, check it out. We have a lot of great signups. This should be a great time tomorrow. Wednesday, April 15th, tax day. Used to be tax day. Things have been delayed a bit this year. But check this out on the front page. Basil putting together a great all-day webinar. He's going to be in there with subscribers in the room from 9 a.m. till 4:30 p.m., 2 3-hour sessions. They'll take a break for lunch, half hour to finish the day. This will be archived, so you'll have the 6.5 to 7 hours of archive of this accessible on your members page if you can't do the whole day, whatever it be. Very understandable, but it's a great time in terms of people at home. The market with the action it's having, peaks and troughs. Amazon about to open at an all-time high. Basil's going to be talking about easy technical tools that can give buy and sell signals using the Chapman Wave. He's going to alternate choice of positions, talking to the attendees, talking about what they have going on in the market, taking a look at those. Each technique was going to be discussed and practiced in detail, how to use the technical tools Basil works with, whether it's the Chapman Wave, MACD, all the tools he talks about on his program every day at noon on the Tiger Technicians Hour, how to use those technical tools that can initiate and keep you in a trade. You also get a month of the opening call. That comes with archived webinars he's done for opening call subscribers. And initially, you'll get emailed initially right away the Chapman Wave techniques to get used to what he's going to be talking about. And I encourage you to check it out. Opening call, great service. You get 30 days too as well. $395. That's starting in 24 hours and 13 minutes from right now. Perfect day to sign up, get a head start on everything, and then be in there tomorrow morning with Basil. And don't forget, too, we still have the open house going on in the Tiger's Den. I think we're going to run that through this month, so check that out before that runs out. We've had a lot of great signups already as well. What else we have going on in terms of, where are we? Stocks making moves. There we go. We talked about Johnson & Johnson. We talked about JP Morgan out with theirs. Roku, they are out with their numbers as well. This company, you want to talk about volatility before even the COVID-19 outbreak. That stock popping. Company says it expects streaming hours grew 49% in Q1. Not really surprising there as well, right? I signed up for Disney Plus about a week and a half ago. I've also been plowing through some good stuff on Netflix. Ozark Season 3 is out there. I'm watching Handmaids on Hulu. I hadn't really done that before. So you spend a lot of time at night. You know, you're not going out as much. You're not meeting up with friends. Of course, that's happening. The company said it estimates 39.8 million active accounts as of March 31st, a net increase of 3 million since December 31st. It also expects its first quarter streaming hours to be 13.2 billion, a 49% increase. Huge numbers. Not too surprising there. I think, Netflix, check out that pop from 95 to almost 112. You're going to open $15 higher, almost 14% on that stock as we look to the open. And since we're on the subject, Netflix, I believe that was an all-time high yesterday, was it? We're sitting at $399. We made it over 400. Yeah, I believe it is. Let's back it up. Oh, no, we were up there. 423, so in 2018. But look at right where we are. We're going to open at 396. I mean, this is just right near the upper bound, and maybe it's been consolidating here. I mean, you got to this at least for almost 2 years on Netflix. And, of course, you have Amazon. They are ticking up even a bit. We covered them. Now, what's interesting here, that's going back to a similar time frame, right? June of 18 was what we were looking at Netflix. We've been bouncing around here for a similar 2 years on Amazon, about to plow through. Maybe Netflix is going to do the same thing. Disney, another streaming giant, quite a different chart on Disney. Disney's had some real volatility. They just came out and they said, put this on a daily from where the collapse really began, from 153 to 79. We're going to open at 106. This pop here over these 2 days, putting in an even shorter time frame, that's when they came out and told people that they got 50 million something subscribers. You retrace the whole move from 109, you were back down to 100 in no time. We're going to open about 106 on Disney right now. Stay tuned, folks. We'll be coming back from the break, see what else we have on tap for Tuesday trading. Don't forget, Basil Chapman, tomorrow, all-day webinar. Check it out on the front page at TFNN.com. We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. S&P is positive by 44. The Dow positive by 37. We were talking about Disney last segment. We're up at about 106. Part of that probably having to do with they struck a $5 billion unsecured credit agreement, which said it may be used to fund day-to-day operations. Always a good idea to have cash on hand right now for the next year or two as we weather this storm. Disney businesses such as theme parks and movies taking a significant hit, as we all know, from the COVID-19 pandemic. Apple as well. Apple shipped 2.5 million iPhones in China in March, according to government data. It had shipped only 500,000 phones in China in February. So interesting to see that shaping up as they get back into business. We'll pull up Apple's chart in a moment. Exxon sold another $9.5 billion in debt. Talk about raising cash with varying maturities. Interest rates range from 1.571% for debt due in 2023 to a 3.45% for 30-year debt. Remarkable that you're putting your money with a company for 1.5% right now. And a company like Exxon, for some context here, folks, as we're sitting with oil at $21.45. Exxon shares, longer time frame, 3-year weekly. How about from $90 down to $30? How about from $70 starting the year, cut in half to $42? These dividends, we'll see what happens there. But Apple, we also talked about shipping 2.5 million phones. We're going to open at about $279. Apple, you're going to be at $280. You're going to be within $47 of that all-time high. And you're going to be back when you open to really just where we finished the year in December of, quite a run Apple had. If you look at things even from the month of December, you were at 261. So, yeah, Apple's trading from 327, but you had an epic rise anyway ahead of all that action on Apple. And why not? We'll finish it off with one of the FANG charts with Microsoft. Quite a charge in Microsoft. We're going to open at about 169 on this stock. You're talking about only $20 from the high in similar fashion. You're now back to really just the run that you had in in Microsoft from January 27th, basically the week of. This is just weeklies. Those 2 weeks, we're back to action in terms of just near those highs in Microsoft. Stay tuned, folks. We got our man Larry Pezzamento coming up live with Trade What You See. I'll be back at 10 o'clock with Tom.